Hey, Bulls and Bears, we are back with another dose of economic reality, and things are getting real. Let's take a look at the markets here. We're going to talk about some other financial news, cost of living, a lot of the usual things that we cover, plus a little bit of other details that we don't normally get into. We'll talk about that in just a few minutes here. It's March 9th, 2023. The market just closed. I wanted to wait. It's about 1 o'clock Pacific time right now, and markets just closed. Dow Jones down 1.6%. That was good for a drop of 540 points off the Dow Jones. S&P 500 down even more, 1.8%. NASDAQ down 2%. And the biggest drop of the day, the Russell 2000 down 2.7% as of closing. Looks like it just updated. Wow. So the markets are finally beginning to price in economic reality as far as I can see. The sell-off was intensified because there's a jobs report that's coming up. And even though the numbers are flawed, you do start to see a trend when you compare flawed numbers months in a row. So just because something's not accurate doesn't mean that you can't still see a trend out of it. Because if something is underestimating something by, let's say, 20%, but you still see a worsening of that, then you know it's just add on 20%. But then you do see the trend just by looking at the numbers. The labor force participation rate is still not recovered to where it was pre-2020. So anyone looking at the unemployment rate or the jobs added numbers thinking those are really gauges of the economy, you might want to rethink that strategy, because those things are not going to tell you what's happening. Consumer debt, the number of people late on their loans, car loans, credit cards, not just late on credit cards, but late, plus people not paying in full each month, that's really increasing. And with the interest rates being where they're at right now, that's a recipe for disaster. So I don't think it's going to be, I don't think this economy is going to make it through 2023 still with so many people doubting that we're in a severe economic downturn. Most people right now, I think, still are just looking at the main business news channels, the cable channels, and they're talking about what stocks to invest in. Everything's fine. Let's look at earnings of this company, of that company. How long do you think earnings are going to be looking good with the consumer in such high levels of debt right now? And actually, earnings are not so good for some companies. But yes, earnings are looking pretty good for some companies because the cost is so much higher. They're just looking at their overall, their profits. But what about after their expenses? What about the inflation that companies and businesses are seeing? It's just like your household. You may get a raise of 3%, which is pretty good. 3 or 4% raise annually is pretty good. But if the cost of living went up 8 to 10%, your raise is not keeping up with the cost of living, right? Companies the same way. They're having to raise prices. Many businesses having to raise prices because of the higher cost of transportation, the higher cost of energy, everything else that's going up, passing those costs along to the consumer. All right, but let's get into some other news here. All right, listen to some of this news. Listen to this next item here and tell me that if you were an investor, and maybe you are, but let's say you're not an investor thinking about investing, would you invest with this type of news? Here's a headline today. U.S. job cuts between January and February, the highest since 2009. And also, if everything was fine, then why are they raising rates? If everything was fine, if the consumer was fine, why mess with inflation? Why try to slow inflation down with rate hikes if the consumer's fine? Obviously, the consumer's not fine. That's why they feel the need to go ahead and try to tamp down this cost of living, this inflation. So they know something's going on. Also, we had this Inflation Reduction Act with $1 trillion plus thrown at the problem. Where's that at? Why is that not helping? Well, I think we all know that these acts and these packages, these bills that are passed, typically do little to none to really fix the problem. And in most cases, from my research, they make things much worse. Look at the rental assistance programs. Did that help make rents more affordable? No, it made rents go up a lot faster than at any point in history than we've ever seen. So when the rental assistance rolled out, or when the eviction prevention programs rolled out. Rents skyrocketed the fastest that we've ever seen in this country ever. Coincidence? You may think so, but I don't. I don't believe in coincidences like that. So we can see the direct effect of these interventions in the market. These programs designed to help. Temporarily, they may give the appearance of helping, but they usually don't help in the long run. That's why we all here need to prepare for what's coming down the pipeline here. I think we're going to continue to see the cost of living beyond most people's budgets. So the key, the people that are going to be really successful is the people that have really low overhead. If you have your home paid off, if you don't need to go out and run up your credit card just to buy necessities, if you have very little overhead, the people that I'm seeing the most comfortable right now and financially secure are people that are older, retired, either one, their family, like their kids have moved out of the house and they don't have to pay for their kids' expenses anymore, or two, they just don't have kids. Because that's a hammer right there to your finances when you have to pay for child care, the cost of raising a child, paying for everything for the child. It's very, very life changing, right? So the people just that I'm seeing through my job, my clients, the most successful people are retired people, people that don't have family, let's say under 20 years old, right? The people that do have family under 20 years old, I'm seeing more of them in a very stressful, severe financial situation, right? So that's going to be the group that's going to have, I think, the hardest time going down the road here is going to be people with younger family members. But a lot of people are having to take care of family members now. I just talk to so many people now through my job because we talk about people's finances and budgeting and things like that. A lot of people are taking care of their older family members. So a lot of parents moving back in with their kids because the kids a lot of times do not want to send the parent to a nursing home. And that could be life changing too if you have to care for an older adult. It can be very one time consuming, very expensive. You may have to miss work. You may have to quit your job if it's somebody with severe medical issues, right? Talking to people with a lot of that going on, right? So the health of your friend, of your family, and the health of people around you can really have a major impact on your finances. Something that I really tell myself a lot is I want to keep myself as healthy, as young as possible. I don't ever want to have like my kids or someone else taking care of me because you lost your mind or whatever. But as far as that goes, I mean, mental health is going to be very, very hard for people to keep control of. There's a lot more depression, a lot more people on antidepressants. One, the way look at the world, the debt situation, the economy. I mean, in general, a lot of people, even though they don't see the news talking about it, they feel stressed financially, and financial issues are the number one source of problems in relationships. So we're seeing more relationship problems. All right, but I've always told myself I'm not going to be a burden to people around me. I'm not going to be disabled. Sometimes things happen and you cannot help it. But as far as becoming obese or something like that, I'm being very, very careful what I eat, watching the scale, not letting myself get above a certain amount. If I see myself get above my typical weight, if I don't have any fat, well, everybody has a little fat, but if I have a little fat, typical weight's about 170. If I see myself getting above 180, I can carry a couple extra pounds, but I don't like to get above 190. If I do, then I start drastically changing my diet. And maybe that's not the best way to do it, but I am conscious of doing that because I just don't want to become unhealthy, to be a burden on my family financially and in other ways as well. All right, but some other news. Let's move on here. But the big story I wanted to put out here today was what CNBC had reported. But anyone here that's been on this channel knows that this is a matter of time before the credit card debt overtakes Americans' ability to keep their head above water. CNBC article today, the 9th, just came out, putting households near the breaking point. So there's a study saying that households are near the breaking point, or the country's at a breaking point where so many people are going to fall behind that it's going to be an avalanche or a tsunami of defaults, late payments, bank failures. Will there be bailouts instead of bank failures? Nobody knows, I don't think. Maybe there'll be bail-ins. But let's go ahead and take a look here at what's being said here. Using the Great Recession as a guide, the projected breaking point is the level of household credit card debt that will become unsustainable for most people. And I've reported on that many times. We're headed that direction. And this is a quote here. It's when people won't be able to keep up with their bills. We're inching closer to that breaking point. And this is a study out of wallethub.com. And then she closes it out here, quote, if unemployment goes up and we see a spike in delinquencies, then that indicates a longer term problem. So that is the breaking point, right? So even though it's a false number, it's a manipulated number, watching the unemployment rate is going to be something to tie in with these late payments and this rising debt, the rising number of people not paying off their credit card in full each month. And I think that's going to happen sometime this summer, probably mid to late summer if I had to put a timeline on it. But again, a lot of things could be manipulated and prolong this or delay this. Maybe we'll see massive debt forgiveness. I mean, who knows? But the share of household income going towards consumer debt is back to where it was pre-2020. Remember, we had relief in 2020. A lot of people know that, but we're back to where we were prior to 2020. And things are not getting easier because mortgage rates just hit 7% again. So people waiting on the sidelines for a more affordable home, for prices to come down. Unless you have cash, you're going to have a very, very difficult time keeping up with that payment with the close to 7% mortgage rate, right? So I hope you're in the group. If you're watching right now, I hope you're in the group that's paying off your card in full each month. It's continuing to add on to your savings, and maybe you're taking some of your savings and investing it somewhere. I still am a big advocate of silver. I think silver is going to be one of the big things implemented here in our monetary system when this whole house of cards come down. As far as how long it's going to take to come down, I think it's going to be still a while. But this year we're going to see definitely some wake-up calls for a lot of people when we see consumers really get delinquent on these credit cards. It's going to be the area, one of the biggest areas to keep an eye on. And I think markets are going to start pricing in reality with this huge sell-off today in the stock market. So hopefully you're not losing money in the markets, or hopefully you're not spending more than you're taking in right now, and being cautious with your spending. That's what I'm doing, and that's what I think people that are paying attention are kind of doing right now. But either way, please let me know what you think down in the comments about this. The highest number of job losses since the financial crisis, going back to 2009. The CNBC article that consumers are almost at a breaking point. What's your timeline on it? Or is nothing wrong? We're just exaggerating. Everything's fine, and we're just going to go decades and decades here with nothing significant happening. Either way, please let me know. Thanks everybody for being here. Big love. Keep stacking. Bye for now, and peace.